Good morning. It's Monday the 5th of December. This is the Phoenix Blue morning update presented this morning by Tom Colley. Couple of significant events we've had a Friday stroke over the weekend that we'll talk about first. We had the non-farm payroll numbers out on Friday, and then over the weekend we've had the result of the Italian referendum. So over to the news, and here we are first with non-farm payroll. The actual employment change numbers came in virtually bang on forecast. The unemployment rate, however, came down quite substantially to a new sort of record, or certainly in terms of living memory, record of 4.6% against a forecast of 4.9%. So that was certainly very positive. The only disappointment being the average hourly earnings. In respect of what this means for us, it would have taken a really bad numbers for the market to perceive any risk in the rate rise in December not happening. That remains 100% written into the markets or priced into the markets. We will be looking forward to what happens there next week when we actually get the FOMC statement and press conference. What the markets really appear to be doing now is looking forward to what happens next year in terms of rate rises and how the dollar reacts to the Fed announcement. We'll be looking for forward guidance from Janet Yellen, and the degree or the certainty of that forward guidance will undoubtedly determine how the market reacts. A rate rise, I feel sure, will not actually push the dollar any higher because that's written in. If the forward guidance is strong, meaningful, then we could see a continuation of dollar strength. If, however, it's subject to data, etc., we could well be seeing a pullback on the dollar, a correction of quite a substantial nature. Okay, then the key thing over the weekend we were waiting on was the Italian constitutional referendum. Definitive no vote came in there. I'm not sure that the government weren't actually that wasn't unexpected to them. The way that I saw it was the polls closed, the exit polls came out, and with a matter of minutes, Prime Minister Renzi was speaking and saying that he will hand in his resignation at a cabinet meeting this afternoon. Whether that resignation will be accepted by the President or not is another matter. However, the real key risk in this is not the referendum itself, but the failure of Renzi, having nailed his colours to the mast very much for a yes vote, could lead to an early Italian general election. That's the area that the euro area will be concerned about. We've got in next year we've got Dutch elections, we've got French elections, we've got German elections. If we have an Italian general election preceding that with potentially anti-EU votes, we could very much see the scenario worsening once again in the euro area. But as far as I'm concerned, it will take that general election to make this a truly critical event. We'll have a look at the euro in a moment and see how that affected it. We also had a rerun of the presidential election in Austria. The anti-EU far-right candidates lost that election, so the risk from the Eurozone area from that event has gone. Okay, before we look at the charts, what have we got to look forward to today on the news? 9:30, we've got services PMI on the pound. Be looking to see whether the environment we have of a relatively or of low value of the pound and still access to euro markets, making exports very competitive, and also services exported as well, to see how that figure will come out. Expectation is a slight drop over the previous month. We also have ISM non-manufacturing PMI on the US dollar, and then overnight, a big one, we have the Aussie rate statement and cash rate. Based on what's been said recently here, we're not anticipating any change of rate here. but obviously what's said in the statement is going to be the critical factor there. So we'll look at that and we'll comment back on that with you this in the morning. Okay, so here is the dollar index. After the news on the Italian referendum, the market actually gapped, but it subsequently come down, closed that gap, and we're still very much in this ranging area, consolidation, whatever you want to call it here. Significant level here. If we see a break of that level, we have been talking for a while about a potential dollar correction. We may or may not see that. The definitive answer to that, I'm sure, will come with the Fed announcement I've already mentioned next week if we don't see it in the short term. However, this week what we'll be looking to continue doing is we'll be looking to sell yen weakness through cross pairs. We can see that we've had the yen and it's still very much in an upward trend. It's actually in a channel here. We've got a key level through here at the top. And also we've actually got a COT signal suggesting that the market's in need of a pullback. However, in the current environment, that may not necessarily happen. We will wait for a confirmation. If we were to see a double top, then that might be something we could consider trading back to the downside. But at the moment, we'd need that or a break of this trend line to even start thinking about yen strength before that Fed announcement. Over on the euro, well, this is the spike down we had down to support last night when the referendum in Italy results came through. We've seen quite a recovery from that. The spike was in the Asian market, so relatively low liquidity on a Sunday night. And as I've said, I think there was a fear factor had built up around the result of the Italian election referendum when actually the fear or the risk event for the euro is actually a general election being caused by the result of the referendum. So we'll be watching this chart. Clearly you can see where we're at here. We've got a strong channel down here. We've retested that channel, so we'll either be looking for a break to the upside back within the channel, or should events conspire, a break below here. Worth mentioning, on Thursday we have the ECB minimum bid rate and ECB press conference, which again is going to be very critical in this area, so be aware of that when you're taking any trades, because you don't want to be going into the middle of the day on Thursday without any positions with stops at break even, because there's a deal of uncertainty about what may come out of the ECB meeting. Certainly the markets are looking for confirmation that the existing easing measures will extend beyond March. And we wait to see again what's actually said about that and what stance is taken with regard to the longer term. The other thing that we'll be looking to trade again this week is pound strength. Since the Trump election, the pound's been way the strongest currency with the exception of the dollar. It's even been strong through last week against the dollar. As the dollar's been consolidating, the pound's been continuing to rise. We'll be looking for opportunities to the long side on this, and we'll also be looking to trade that same pound strength through the pound cross pairs. Over on the S&P, we've had an interesting day so far. We had a move down through the week. Friday, we had somewhat of a halt, and then we had a close, an opening gap, but then we've had a very strong push through, which actually, if I look at a live screen so far, has continued above the level of Friday's high. So we're getting quite a bullish move through there. We are interested to see how this plays out relative to gold on the risk on, risk off scenario. The markets, or interest certainly in the stock markets, should be to the long side. Seasonally, December is one of the strongest months. We have what we call the Santa Claus rally. Whether we see that play out or not, well, a lot will depend on other events. Okay, guys, that's it for today. Just a reminder. Keep your eye on the messages coming through at Phoenix Blue Trading on Instagram. You can also follow us on Twitter. And make sure that if this is the first time or you've signed up to the YouTube channel, so you get email reminders when these are due out every morning. Okay, have a great week's trading, and we'll speak to you again in the morning. Goodbye.